Hello, Stephen Cruz here with MyMortgageBroker.com and Paragon Mortgages. I wanted to talk today a little bit about financing or refinancing your home with bad credit. And so I'm going to go through some of that today. Before we start, if you like what you hear, please subscribe to my channel before. Give me a little like on the button somewhere around here. And if you want to get more videos or have any questions that I didn't cover here, please fill out comments below and I'll answer your questions. If you have some specific questions about your own specific situation, then I'll put a link in the comments as well so that you can find me and ask me some more specific questions about your situation. You don't need to have that going everywhere and have everyone watch that. So let me just share my screen and do that right now. Okay, so I wrote an article a month ago, about how to refinance your mortgage with bad credit. And in this article, I review a number of different client scenarios and give some examples and situations. And so if you wanted to read through that, you can get an idea about some specific client situations. And I go through in fairly decent detail about some of that stuff. And what I'll do right now is I'll open up my presentation so that I just have a summary of things for the video. All right, so before we start, let's talk a little bit about what a refinance is. So when you refinance your home, basically, as a lender, as a broker, as a banker, I think of paying out the mortgage and the one you have now and getting a new one. And so that's what I think about when I say a refinance. If you wanted to get cash out, often it's a refinance, but sometimes it's a second mortgage, sometimes it's a home equity line of credit. There could be other things, but when you refinance, it's getting more money out of your property, getting some of the cash out of your property. So that's really the definition. I want to make sure that everyone understands that so that we're on the same page. There's a few different lenders available for something like that. There's A lenders, there's alternate lenders, and then there's some private lenders. If you're going to refinance your home and you have bad credit, likely we're going to be looking at alternate lenders and private lenders as the options. But an A lender, sometimes I have, depending on the bad credit situation and what your score is, etc. I've found A lenders that will do certain mortgages. Not everyone will, but some will. So it depends. It's possible to get an A lender. The difference between A lenders is A lenders typically give the lowest interest rate. Alternate lenders are going to be a little more, and there's typically a lender fee. Private lenders are a little bit more expensive again, and there's fees as well for that, extra fees. So let's talk a little bit about those three. An A lender will finance up to 80% of the value of your home. On a refinance, they will not go any higher. On a purchase, they can go higher, but the maximum they can go, which is called the loan to value, is 80% of the value of your home with an A lender. They'll typically do a first mortgage, typically offer the lowest rates. If you're going to refinance with an A lender and there's a penalty to get out of your mortgage, or it's not a good idea to pay out the mortgage for whatever reason, then often they'll offer a line of credit in second position at typically decent interest rates, good interest rates as well. Line of credits are often offered at prime plus a half or something like that, and you can often get a fixed portion within that home equity line of credit. So it's a possibility. If you have bad credit, you typically don't qualify for a home equity line of credit, and so then we look at an alternate lender. They will also go up to 80% of the value if they are governed under the rules of OSFI. That's the Office of the Superintendent for Financial Institutions, and many alternate lenders are now governed under those rules, and so they can only finance up to the max of 80%. Generally, as first mortgages, often they'll offer little second mortgage options, but typically with an alternate lender, we'd be looking at a first mortgage, and the interest rates are a little bit higher than a traditional lowest A lender rate. So you're going to be looking at 1.25%, 1% to 3% higher than traditional A interest rates. And then after that, we have private lenders, and there's all sorts of different private lenders available as private individuals, and we have mortgage investment corporations and others that all offer money. Some of those lenders will actually go up to 90% of the value of your house. You can go to 80, 85, 90. The interest rates are going to climb as the higher the value, the more mortgage versus the value of your property you're going to do. And so, and those private lenders, generally when I use a private lender, sometimes I'll do it in first position, but most of the time we do second position. So we leave the first mortgage in place the way it is at whatever good interest rate it is, and then we set up a second mortgage on top. And normally there's a solution that helps you to get into a better financial position after. So with respect to alternate lenders, they are a little bit more flexible with your credit. So bad credit is okay. Pricing is often determined by your credit. So the worse your credit, the higher the interest rate they will charge. And then they're fairly flexible with respect to income. So they'll look at other self-employed income. They'll be more flexible with your self-employed income. They might take roommate income, which a bank typically doesn't take. They might take some side jobs if you're showing some cash flow consistently from a side job. Most banks want to see 2 years, whereas an alternate lender, as long as you can prove 3 to 6 months of cash flow, then they'll use that. Cash jobs, if you do cash jobs, whether you're shoveling snow for neighbors or whatever and getting cash for that, they will accept that. Most income that you accept, they want to see it go through something. So you want to push that income through your bank account so that they can track it and see what kind of cash flow you have, and to justify lending based upon more income than a pay stub or whatever that you're doing. Also, they will determine the pricing on the type of mortgage that you have and the versus the loan to value. So if they're going to 80%, with an alternate lender, sometimes that will affect the pricing or the location. Sometimes they don't like certain locations. They want to be in their major center. Then your credit score will also determine that. If we go to private lenders really look at things on a case-by-case basis. And each private lender has their own preferences for what they like. And so if you can make it make sense of it, they will typically do it, or most of them will. And so when you're looking at alternate lenders or private lenders, it's really important to go to your a mortgage broker who deals with those. I've found even for lenders, we have lots of access to lots of lenders, and we know the difference between many lenders, where they'll never tell you the nuances and the various little differences between each. And we know lots of private lenders that will finance 90% of the value of your house, where it'd be very hard for you to find that unless you call, could be hundreds before you find one that'll go that high. So we have lots of access because we work with so many of them, and we know what they offer, where they offer it. Some of them prefer certain centers and don't prefer to go other places. So it's really important to work with a broker when you do that. Private lenders will charge more typically than alternate lenders, and there will be fees, lender fees, broker fees, typically legal fees to set all that stuff up. And then they'll do first or second mortgages. The lower the loan to value, the better pricing you're typically going to get, but it's not going to be fantastic. And if it's a first position mortgage, so first means first position, that means that you don't have any other financing on it. If a second would be, if you already have a mortgage in place, then they'll go behind it. They'll even do thirds. I have some private lenders who'll go in third position as well. But again, it just depends on your situation, and the loan to value for the pricing. So the thing I want to really emphasize when you're getting financing or refinancing with bad credit is we usually go through a progressive analysis. We look and see if you can qualify with an A lender, so we can fit it with an A lender. Then that's what we'll do. If not, then we'll look at an alternate lender or alternative lender, and then we'll go to a private lender. But what you also want to consider is whether or not maybe it's better for you to sell your house rather than get a second mortgage or refinance. In many cases, I've talked to clients, and well, I wouldn't say many cases, but a number of cases, I've talked to clients who look through the numbers and I've said, you know what, it's better for you to sell than to stay. And some of them have decided to do that, some of them haven't. Just depends on their situation and what they want to do. Sometimes there's a quick fix. So sometimes you have some bad credit, but there's a solution that I've noticed that we can fix that problem that you have with your credit. And if you wait a month or so, we could potentially get you in an A lender just because there's one item that's bad, but and it's fairly easy to fix. So sometimes there is a quick fix. Sometimes you need the financing to get back in track, and so I've looked at options where you do a short-term solution, private financing, and then once that helps get everything turned around, then we can put you into a better financial situation and move you to an alternate lender or an A lender. And so we look at all those options with you and discuss it with you so that you can get the best deal for you, and you can really, for me, it's more important that you get into a better financial position so that you can move forward and get back on track. And sometimes that's selling. Sometimes it's better to sell, then you get in a better position, and then you can move on. Sometimes then not selling and staying can be worse for you because you're paying interest and you're never going to get away. So I often look at all of those options with you as a client to make sure that you're going to be in a better position next. So that is the summary of getting mortgage or refinancing with bad credit. It is possible to do that as long as you have enough equity in your house and as long as you can show some cash flow. And then we need to hear the story about why the credit happened and what we can do to make sure it gets all fixed and recovered. So thank you very much. You have a great day. If you like this video, please press the subscribe button and the like button, and you have a great day.